everyone, and welcome to iFAST Fund Interactions. I'm Dipali Lalwani, and today we're speaking with Siddharth Srivastav, Head of ETF Products at Mirae Asset Managers. Siddharth joins us today to talk about the latest offering, the Hang Seng Tech ETF and Fund of Fund. Welcome, Siddharth. Thank you for joining us today.
Thank you so much, Dipali, for having me here.
Great. To start off, Siddharth, when we look at all the emerging markets, China is one market that has seen immense volatility in the past few months. In this context, how should investors look at investing in the China tech space, especially with all the regulatory heat that this sector has seen?
So I think that's a very detailed question. It probably will require a very detailed answer. But see, first of all, China market right now, especially the tech market, offers a completely different set of opportunities in terms of the kind of companies you get your exposure into. For example, typically the first country which investors look at while investing in global markets is US, which is fair. Obviously, it's more well known, more familiar market. It has created wealth. But if you have to diversify, look for other opportunities. The Chinese tech companies have done really well, especially on the soft tech side. We are seeing good play on the hard tech side also. I think they have been able to create domestic champions like Baidu, Alibaba, Tencent, Xiaomi, etc. And I think they are working very keenly on developing China as a new tech innovation hub of the world. So if you look, since 2005, the contribution of digital in tech was just around 14%. That has now increased to almost 36% of the GDP. If you look at 2019, almost 58% of the global patents were filed by the tech companies. So it's a good space to be in from a point of view that you get a different set of exposure in the second largest economy of the world. Tech and digital as a whole is around $5.7 trillion in terms of GDP contribution. So you are talking about a very dominant set of companies with very good domestic potential in terms of consumption, and then also very good potential in terms of future growth, especially on the hard tech side. Having said that, you rightly mentioned that China is associated with volatility and risk, and if you look in history, that's been the case, right? Especially in 2018 and in last 1 year because of the regulatory headwinds. But if you look pre-regulatory headwinds, you'll see that China has also created significant wealth also. So if you look in 5 out of 7 calendar years, China has outperformed Indian markets, that too significantly. But in other 2 calendar years, it has underperformed significantly. So it's about whether you want to enter from a long-term point of view and or you want to invest tactically in this product. From a headwind point of view, yes, I think this product is more suitable for uh, investors who have very high risk appetite. This will form part of the satellite portfolio. We are talking about a product, an index which has corrected by almost 40%. In India and US, when you are looking at uh, market which are trading at double digit premium, here you have another possibility which is trading at almost 35-40% discount. It just offers probably a very sweet opportunity in terms of valuations, right? But risk remains. On the regulation side, I think a lot of things have already happened. A lot of clarifications have also come out from the regulation point of view. Things may still happen, but we believe that most of the headwinds have passed away. It may
Okay.
take some quarters for more clarification to happen, but we feel that if investor has the risk appetite, then probably he can evaluate investing in this particular product.
Great, great. Thanks for that detailed response, Siddharth. As you said, this is a product that warrants some close understanding by investors who would want to invest in it. You pretty much answered my next question, which is, how China compares with US as an aspirant in the technology space. Because as you rightly said, people would often always think about US first. Um, Let's deep dive a little more to understand the levers that are helping China. Talking specifically about the Hang Seng Tech Index, can you elaborate on some of the subsectors or sub technology themes that the index covers?
Yeah, sure. Actually, if you look at Hang Seng Tech, now when we are talking about India, we typically think of IT and we think of predominantly as IT consultancy, right? Because in India, typically you have higher exposure towards those set of companies. But if you look globally and if you're looking into tech space, you get a possible ecosystem of companies across domains, right? Be it be US, and that is true for China also. So if you look at this particular portfolio also, there are 30 companies and across tech domains. From a method point of view, the intent is to capture companies which are into internet, mobile platforms, which are into digital ecosystem, cloud, autonomous, etc. So you'll
Mhm.
have presence of companies which are leaders in e-commerce space, internet search engines, social media, healthcare IT, semiconductors, consumer electronics. So you have presence of companies from the soft tech domain, which is social media, e-commerce, etc. Then you also have companies which are from, let's say, semiconductor space, which are companies which are into electric vehicles, autonomous vehicles, etc. So you have a very decent blend, though the weightage is more towards the soft tech side rather than the hard tech side. Having
Mhm.
said that, then you should also remember one thing, that these companies do not have, most of these companies do not have a single business line.
Mhm.
So, for example, Baidu, which is the Google of China, is one of the forefronts in autonomous vehicles. When you're talking about Tencent and Alibaba, you're talking about companies which are into cloud also, which are into e-commerce also, which are into different line of businesses. So in
Mhm.
terms of exposure, you are getting, I think, a very wide exposure to the entire tech domain through this particular product.
Mhm. Great, great. Yeah, some very, very exciting subsectors that you mentioned there. Can you deep dive a little more into the long-term growth levers in this sector? And are there any cautionary points that you would ask investors to look out?
Sure, definitely. I've been talking about hard tech and soft tech a lot. So soft tech is something which is, let's say, an internet or a media company or a social media company, etc. Whereas when I mention hard tech, it's more so, let's say, companies which are involved in 5G, Internet of Things, etc. Now, there are two possible levers of growth or wealth creation in this portfolio right now. For
Mhm.
example, we know that these tech companies have taken a significant hit because of regulatory headwinds. So one uh, thing is that as we get more clarification from the CPC and the regulator, a lot of which has already happened. We have personal information protection law, which goes live which has already gone live in November 2021. We have other laws around data security. So a lot of things are happening. So we believe that one is obviously going back to the normal, right? These companies are down by almost 40%. There'll be some recovery, which we expect, especially on the soft tech side, which may drive the potential wealth creation from this product. Other revenue from growth is obviously the hard tech segment. If you look at 11th, 12th, and 13th 5-year plan of China, they focused on creating the domestic champions, focused on increasing the internet penetration, focused on creating this entire tech ecosystem. And this latest 14th 5-year plan, which came out this year, they want to focus on core technologies like cloud, AI, robotics, etc., especially on the hard tech side. So we see a lot of investment happening in the hard tech side, and because of which we feel that the growth will be there on the hard tech segment. I think these two are the potential levers for growth and wealth creation in this product. One is obviously going back possibly to the earlier levels. Correction has happened, a very deep correction has happened. and obviously for the hard tech, new opportunities because of the expected investment in the hard tech segment. Uh, on the cautionary, I think we have already touched base upon it, so I don't want to beat the bush again and again.
Yeah.
But as I mentioned, that Chinese market is typically more volatile. It is more risky. I think in last 1 year we have seen regulatory headwinds also. So I think for any investor, you have to be cautious around that fact. And typically, when you're investing in this product, just have that risk in mind that possibly for a quarter or two or more,
Mhm.
these headwinds may persist. While we feel that things are clearing out, it may still persist. And
Yes.
going forward in future, also there may be volatility in China, which will affect the risk and performance of this particular scheme.
Yeah, that's a fair and objective assessment there, Siddharth. Thanks. Speaking now geographic exposure, the Hang Seng Tech Index says that it includes companies that gain revenue from the Greater China area.
Yeah.
Now that includes China, Taiwan, and Hong Kong. Can you speak a little bit about the split in terms of exposure across these markets?
So, in terms of exposure, it's fairly straightforward. Right now, the entire exposure is from Chinese and Hong Kong companies. There's no representation from Taiwan in this particular product, and I think possibly that. So that is that. I think
Okay,
around
yeah.
90% is in China, and around 9% is from Hong Kong.
Fair point. Okay. And how frequently is the index rebalanced? You spoke about subsector exposures, and then now you also spoke about the geography exposure. So, how frequently is the index rebalanced?
Yeah, so index is rebalanced on a quarterly basis. As I
Hmm.
mentioned earlier, it consists of 30 companies. It is rebalanced on a quarterly basis. Top 30 companies which are satisfying the tech themes which I mentioned earlier will get included into this index. There are some other criterias also, but I'll not go into those details. And finally, the stock cap of 8% is applied.
Okay.
Yeah, so typically at the time of rebalancing, the weight of the highest stocks will be capped at 8%. There's also one interesting rule that an IPO,
Hmm.
if it's within the top 10 from a market cap point of view, will
Hmm.
get a fast entry into this product. So rather than waiting for the rebalancing, if an IPO is big enough, it is within the top 10 from an MCAP point of view, then it will get included in this particular portfolio. I think that ensures that you're not missing out of any companies
Exactly.
from a long-term point of view.
Right, right. Definitely a very clear focus on capturing any emerging, biggies over there. Great. Speaking now of the operational side of things, from an India perspective, how will the tracking error be minimized or managed by your team, Siddharth?
Okay. So right now we have two US-based ETF as well as fund of fund, and we have been able to manage tracking error pretty well in those. So I think FANG plus ETF has a tracking error of around 9 basis point, which is 0.09%, and S&P 500 top 50 has a tracking error of around 14 basis point, 0.14%. So it's pretty low on the lower side if you think consider that these are the foreign products we are talking about. On the Hang Seng also, we believe that we should be ideally able to manage tracking error around these ranges because we will be investing directly into these stocks, which it will be handled by our own India team. And I think we are very confident of managing the tracking error in this product also. But I think if I have to guess, it will typically be higher than what is there for the US funds because obviously this market is more volatile. The rebalancing is more. The cost associated is also more. So it
Yeah,
will be higher than what we are facing on in the US funds. But I think we should be doing the best we can for this product also.
of course. What percentage of cash do you think you'll hold?
So cash in any case in ETFs, we don't hold any cash. Almost everything is deployed. Anything which is cash is typically for operational requirements, and
Mhm.
it runs into few lakhs Rest everything gets deployed. That this is for ETF.
Mhm.
For the fund of fund also, typically cash is very low, as
Mhm.
less as possible, because obviously you can only deploy money in basket multiples of basket size, right? So if there's an odd money present, odd lot present, then that is something which deployment may not happen. But for this fund, the basket size is around 1.6 cr at current value. So if FOF is having less than that, then obviously that won't be deployed. But I think even 1.6 cr is a very low cash for the scheme.
Okay, great. Thank you so much for all your straightforward answers, Siddharth. We're pretty much done. One last question is if you'd like to leave our investors with any thoughts on how they can evaluate whether or not this NFO is a good fit for them.
Yeah, I think so. We have answered that in several answer questions which you asked. So I think if you're looking for diversifying your portfolio and you've already invested in, let's say, in Indian and in US markets, I think a Chinese market, these Chinese tech company offer a very good alternative in tech giants of East. Uh, these companies have corrected significantly, so valuation looks attractive. There's a hard tech segment where there's going to be a lot of focus on government, so a growth may come in that particular segment. So things look attractive from an entry point of view. But having said that, we have mentioned that there remains an inherent risk because of the opaqueness of Chinese market.
Mhm.
The volatility has been there historically. It may remain in future also. So it is very important to understand your risk profile
Mhm.
and then decide on the quantum which you want to invest. I prefer like this can be a part of your satellite portfolio. I think typically I don't say that a scheme is okay for a short-term investment also, because
Mhm.
even in case of US funds, we should invest it for a long-term horizon only. But I
Sure.
think here there may be people, investors who are looking for this as a tactical opportunity
Mhm.
to enter at these lower valuations, and possibly when there's an upswing they cash out. So depending on the investor preference, his risk profile, his objective, this product can be a tactical play also, and can be a long-term strategic play also for the investor in his or her satellite portfolio.
Great. Okay. Thank you so much, Siddharth, for your time and for sharing all your insights. We wish you guys all the very best with the NFO. And I hope investors actually study the NFO and take advantage of the opportunity. Thank you so much.
Thank you so much, Dipali, for having me here.